All right, welcome back to Coffee Cafe. We were in the middle of our financial statements, right? Step
Right.
8. So here we've completed the income statement, okay?
Mm-hmm.
Here we completed the statement of owner's equity and we completed the balance sheet, which we panned out and our accounting equation is equal to each other. Now, the last financial form, okay, is going to be the statement of cash flows. This one is the more difficult type of statement to complete, just because the level of difficulty for it is that it is kind of difficult to have to understand the flow of cash. Now, in this case, we're going to be constantly asking the questions, do I have the money or do I not have the money, right? And that's
Right.
the purpose of the statement of cash flows is, did you actually receive cash? Where did the money go? So in this case, this is a combination between the income statement and the balance sheet, right? You need to have
Right.
complete those two financial statements in order to complete your statement of cash flows. Now, if you remember, right, the statement of cash flows basically determines how much money flowed into the company and how much money flowed out of the company. And we're looking at real physical cash, as in if you sold a product and you got received cash for it, that means that is the money that's actually flowing into the company. If you're talking about money that you sold or products that you sold, but money you have yet to receive from your customers, so via on accounts payable, that is not considered cash money that you actually received because you're
Mm-hmm.
pending on that cash. So what we're actually doing too is we're moving from an accrual basis of accounting to a cash basis. Where did the actual money go? Okay. So, how we break down our statement of cash flows is literally by breaking down our balance sheet, okay, and also including our income statement, which is going to have that net income. So, starting with the very first one here, let me make this a little bigger here, okay. So, first thing that we're going to start off with is identifying my net income, okay, because this is the money I generated, right?
Right.
So, how much money did I generate in my income statement? What was my net income?
$8,873.02.
Okay. Now, how I use the left and the right side isn't how it's not debits and credits, right? It's me doing my
Right.
calculations. So, the left side is where I calculate my columns, and then the right side is where I just calculate my numbers, like my actual numbers. So like
Okay.
the total of this or the total of that, the net of this, the net of that. Okay. Now
Okay.
each column, okay, or each section, the uh the the uh cash flows, statement of cash flows is broken up into three sections. You have your operating activities, you have your investing activities, and then you have your financing activities. Okay, so
Mm-hmm.
first we have to make sure. Well, what did we receive from operations? Well, we generated net income. We sold our products, and this is how much money that we've earned. Right, we've earned $8,873.02. That is my starting point. Now, can you tell me, is all of that sales that we've earned, was 100% of it in cash?
No.
No. So that's what we have to consider, right?
Mm-hmm.
All this right here, this $8,873 is what we sold, but it's not pure cash, right? A portion of it is accounts receivable. So we have to take that money out. Okay. Now,
All right.
so we're going to go ahead and break down my balance sheet, right?
Mm-hmm.
My operating activities usually includes my current assets, other assets, and current liabilities. Okay? That, because usually that's for your operations, right?
Right.
So in this case, right, that's what we're going to be needing to recognize is whether we have the cash or whether we spent it or whether we need it or not. Okay? Now, before we can even do any of that, we also have what's called non-cash transactions, right? So,
Mm-hmm.
for example, I'm going to go ahead and take a look at my income statement. All right? For example, bad debt. Okay? Bad debt is me claiming money I haven't received yet. Does that mean I spent $76.60 to record
No.
the bad? No, that's considered a non-cash transaction. Same thing with depreciation. Did I spend $655.08
No.
to depreciate my assets? No. So what should the number one thing here is we need to first add back our non-cash transactions first before we can start actually working into our operations, because in this case, right, I never received the debt in the first place. So therefore, I can't spend $76.60. So therefore, that is money that I have to add back to my net income, right? Because
Mm-hmm.
my net income, I took that out, right? Exactly right here, my income statement. I took that money out because it was part of my operations that I have to do, right? But I
Right.
never spent the money. So therefore, I need to put it back into my statement. So here I got bad debt expense, right? I got depreciation and amortization, right? Three of
Right.
those are non-cash transactions. So I need to add those back. Okay, so that's the first thing I'm going to do here is recognize my first thing of operations is I'm going to be adding back my bad debt, depreciation, and my amortization, because these are non-cash. I never spent the money in the first place. So that means I'm going to be um, adding it back in, right?
Mm-hmm.
So in this case, income statement, I'm going to add back the 7660, and I'm going to add back my $655.00, and I'm going to add back that $11.67. Okay, so that was the first thing I need to recognize is this is money that I included in my net income that I took out, but I need to put it back in. Okay, so then the next set of section here is let's focus on my balance sheet. Now, in this case, cash is not something I'm going to put in there because that's going to go at the very bottom of my worksheet there,
Mm-hmm.
okay, to represent my actual cash that I actually have in my bank. So I'm going to go ahead and skip that real quick. Now, what about, so now I'm going to go ahead and narrow down my operating activities by my accounts. So the first one is I'm focusing on my current assets. Now, the first one I have here is accounts receivable. Now, this is the question. Did I receive cash from my accounts receivable?
Uh, yes.
Well, did I,
No.
okay, did I actually receive actual physical cash?
No.
No, right? So that means my net income right now, I need to take that out. I need to take that out from my net income because this money right here, this net income
Mm-hmm.
includes that I earned that money. So
Right.
therefore, since I'm looking at this, I need to take it out because it is money I'd never received. It is cash I never received. Okay?
Right.
So therefore, right, that means I need to subtract this money out because it's not part of my net income. Hold on, let me see. I think I'm supposed to subtract these as well.
what the 7660?
Hold on, let me go back. Yeah, no, I was right. So in this case, so my accounts receivable, I never received the cash, right?
Mm-hmm.
So therefore, I need to subtract the money out from my net income because it's included into net income, but I never received the money in the first place. So
Okay.
therefore, I need to go ahead and reflect. Now, let's take a look at my balance sheet. Okay? My balance
Mm-hmm.
sheet tells me that I am pending $1,455.35. Is that
Mm-hmm.
true? No, it's not, because that included my bad debt that I took out, right?
Right.
Because right now, my customers owe me $1,531.95. This amount that is currently on my balance sheet reflects that, including my bad debt, which in this case I've already added back into my net income, right? Even though I took it
Mm-hmm.
off, right? I already added it back in. So in this case, I need to take the 1531.95 because this is how much I am pending for cash.
Mm-hmm.
So therefore, I need to subtract this money out because I never received the 1541.35 because I never received the money in the first place. So therefore, I need to hold on. I'm supposed to subtract that out. Subtracting this because this was already included in my net income, and that's not true, right? This is money I never received, so I need to take that out from my net income. Okay? All right. So now the next thing here is, let's take a look at my balance sheet. The next current asset I have here is business supplies. Okay? I still have business supplies, right? Worth worth $509.65. Now, is this money, is this cash that I actually have? Or is
No.
this cash I already spent to acquire the business supplies?
Cash you already spent to acquire it.
Exactly. So in this case, I have to subtract this money out because I've already spent the cash to buy the business supplies in the first place. So therefore, I need to subtract this out from my net income because this is money, once again, I've already spent to acquire the business supplies. I don't have this cash anymore. So let's see what my next item here. Same thing with office supplies, right? Do I actually have $80 in cash right now?
No.
No, I already spent that money to acquire it, right?
Right.
So therefore, I need to subtract that out because I've already spent that money already. Okay? What about my inventory? Have I sold my inventory yet?
No.
No. So therefore, all this money I have for my inventory, I spent to acquire it. But second thing is, I never sold them. If they're still on my inventory on hand, I still have them in my inventory. I haven't sold them for cash yet. So therefore, is that money I received yet?
No.
No. So that is also something I need to also subtract out because I realistically don't have this $540.14. Okay? So let's see what else is on my list here. Okay? Next is furniture. So we'll talk about fixed assets later on. So nothing else here. So furniture, office equipment, and vehicles. Those are all fixed assets. So the next one is prepaid accounts. Okay. Now in this case, my prepaid accounts. Is this money, is this cash that I actually received from my operations, or is this money I already spent?
Already spent.
In this case, right? Because we had to pay for rent in advance and we had to pay for insurance in advance. So in this case, this is money I already spent. So I don't have it anymore. So therefore, this is going to be taken out from my operations, right? I'm going to subtract it out. Okay. Then let's see what's the next one. My next one is, I believe, is deposits, right? Same thing, right? Do I have these deposits? Do I actually have these in cash, or did I spend it? In this case, I spent it, right? Because I had to put it down, a deposit for the water, deposit for the gas, and deposit for the rent. Okay. So the last one we have here is goodwill. Okay. Goodwill. Now, goodwill is me acquiring a intangible asset, right?
Right.
Now, do I have this in cash, or did I had to buy it? Spend the money to acquire this intangible asset.
Spend money.
You already spent the money for it. Now, in this case, is it currently right now at $2,088.33?
Yes.
Well, that's what I have right now. Let's take a look at my adjusted trial balance, right, for my goodwill. Okay, my goodwill tells me, where's goodwill? My goodwill tells me that includes depreciation. What is depreciation once again? It's a non-cash transaction, right?
Right.
So is that possible that my goodwill is at $2,088.33?
No, it's still at the 2100.
It's still at the 2100 because that's what I originally purchased it at, right? I already added back the depreciation for the $11.67 because again, this is money I never spent in the first place. So in this case, I acquired my goodwill at 2100. Okay, so statement of cash flows. So therefore, I spent 2100, okay, on my goodwill. Right? So that concludes the first section right here, which is your operating oh wait, no, we still got accounts payable. Okay, so that was the first section here. Non-cash, we got to add those back in there. We did our current assets and we did our other assets. Now the next section is going to be current liabilities. Okay, so let's see what my first current liability is. Okay, so my first current liability here is going to be accounts payable. Okay, now my accounts payable, right, says that I owe $6,169.47. Is this, did I pay for this yet?
Yeah.
Well, I owe the money, right? So have I paid for it yet in cash?
No, you haven't. No.
No, I'm still pending to make a payment for it. So in this case, right, that means this $6,000 I still have in the bank because I never paid for it, right?
Right.
So therefore, that means I actually have $6,169 because I never spent the money to pay for these bills. So that means I need to add that back into my net income because I never spent the money in the first place. So same thing with any other current liability, right? Notes payable. Did I make a payment for my did I make a payment to my notes payable?
No.
No, I still have this $4,000 cash because I never paid for what I owe. So therefore, I still have $4,000 in cash in my pocket because I never spent the money. So that's how we have to understand that. Okay? So let's see what my next liability is. Payroll liabilities. Have I paid the government at all? Did I pay the government at all for having employees?
No.
No. So that means I still got $3,153, right? Because I still owe the government. I never paid them. So therefore, I still have this $3,000 cash in my pocket. Okay? And then let's see what's next. I have sales tax payable. Okay? Same thing. Have I ever paid the state and local agency their money yet?
No.
No. So you still have that $2,046.11. So you need to add that back into your cash flows. And last but not least, interest payable. Right? That's my last current asset because loans is a long term. Current liability. While my loans is a long-term liability, so it's not included here. So my last one is interest payable. Did I pay my bank lenders interest yet?
No.
No, I still have to owe them. I still have this $105.04 left in cash. Okay? So what I'm going to do here is I need to tally up my totals here. Okay? Because all of this is what's going to, I need to know how much is my total net operations. Okay? So starting with adding back $76 because I never spent the cash to depreciate from my net income. So I need to add all of these numbers up together. So starting with bad debt, I need to add the 76. I need to add the depreciation, add the amortization. I need to subtract my accounts receivable, subtract my business supplies, subtract my office supplies, subtract my inventory, and subtract my prepaid deposits and goodwill. And then I need to add back all my liabilities because it's money I haven't paid yet. So, what is my grand total operating activities?
$12,119.30.
What was that?
I got.
So remember, we're not including net income, okay?
So we don't include the net income?
Not yet, not yet. We'll do that in a second.
Okay, so I gotta minus that out.
Okay.
It was 88.
7302.
Okay, 3,246.28.
Perfect. Good. So that's your total operation. So now I need to, since it's a positive number, I need to add that to my net income. Okay? Because it says money that I am calculating here. So I need to add these two values together. Right? And you already told me was 12,000. So you did it correctly. It is the 12,000 because you just you subtracted it back out. Because in the
Right.
first one you calculated this was, so you're at 12,119.30.
Yeah, that's what it was.
Okay, yeah. All right. So this is my net after my operating activities. So now I need to go to the next section, which is my investing activities. Investing activities will include the section for your fixed assets. Okay. So this
Okay.
is meaning, what did you spend to purchase your fixed assets for? So this is called investing activities. So this is where you're going to be subtracting a lot of money because you had to buy your furniture, right? So we're going to
Right.
take a look at my balance sheet once again. Okay? What are my fixed assets here? You bought some furniture,
Furniture.
you bought some office equipment, right?
Bought a vehicle.
You bought your coffee brewers, which is your equipment, and you bought a vehicle. Okay? Now, if you bought all of these items, right?
Right.
Is that money that you have or is that money you spent?
Okay. That's money you have.
So, by me acquiring my vehicle, I have $32,000.
No.
No, you had to spend the money
Money.
to buy it, right?
Mm-hmm.
And if you remember, we paid cash for our furniture. We paid cash for my office equipment. We paid cash for my coffee brewer and coffee grinder, right?
Mm-hmm.
So that is money I don't have, right? I spent it. Now let's go into my balance sheet and figure this out. Did I buy my vehicles for $31,951?
You're doing payments on it.
Well, yes, we're doing payments on it, but my question is, did I pay for my vehicle for $31,951?
No.
No. So this is where I need to go to the unadjusted trial balance to see what I actually have. Because if I look at my adjusted trial balance, my furniture, okay, let's do the vehicles for example. My vehicles, right, includes the purchase of my vehicle minus out the depreciation. And depreciation is considered a non-cash transaction, right? Because I never spent the
Right.
money. So in this case, I purchased my vehicles for $32,000, right? That's
Right.
exactly what you need to record. So that's why you need to go to your unadjusted trial balance to see what you originally historically purchased all your fixed assets for. So in this case, I go to my unadjusted, I go to my furniture. I originally purchased my furniture, which included my tables, my desk, counter, and shelves, right? I
Right.
purchased them all at for $9,033.75
Mm-hmm.
because that's what I originally purchased it for, right? Because depreciation is considered a non-cash transaction. This is the historical cost I need to look at. So how much money did I actually buy my furniture for? This $9,033.75. So that's what I need to put in my cash flows is I end up spending, right? I end up
Mm-hmm.
spending $9,033 on my furniture. I end up spending $2,863.20 on my office equipment. I end up spending for my regular equipment $12,146.20. And then I also end up spending, I also end up spending $32,208.90 for my truck, right?
Right.
So how much did I spend for my investing activities? So just this section here.
Okay. Okay, you have a negative 56,252.05.
Okay. So since I spent so much money to invest into my company, how much cash should I have now? So I'm going to take my 12,000, okay, from my operations, and I'm going to subtract out that $56,000 that I spent to invest into my company. And what do I get?
Uh, you're in the red for 44,132.75.
Okay, good, right? All right. So now, next one is going to be financing activities. So this is going to be your long-term liabilities, right? Because I end up taking a loan, right? When I take out a loan, what does that mean?
You're paying money out.
No. When I take out a loan,
You are getting money.
you are getting money. So in this case, I took out a loan, right? Right now, let's see what my balance sheet says. Right now, I am outstanding $28,445.14. Now, here's why I didn't receive the 29,000, right? Because in this case, a portion of this money is in your accounts payable. Remember when we decided to pay, recorded our bill?
Right.
That section's already in your accounts payable. So in this case, the loan, you end up borrowing $28,445 as of right now, right? That is money that you received. Okay? Now, other things that affect your financing activities will be any equity accounts. Okay? Now, in this case, I'm going to go to my balance sheet here. My owner's equity. Okay? What does my owner's equity include right now? My $35,873.02. What does my owner's equity include already?
The net income?
Right. I already calculated my net income from the very beginning. So therefore, I need to subtract that out, right? So I'm going to go to my statement of equity and see what's going on. So in order for me to get to that $35,000, right? I added my net income. I already included in the very beginning of my statement of cash flow. So therefore, I need to take that out. Okay? But I also had an owner's withdrawal, which decreased my amount. Now, what did I originally invest into my company?
30,000.
You originally invested $30,000. So that is something I need to put into my statement of cash flows because I put originally when I started my business, I started out with $30,000. Okay? That is money that I put into the business, right? I finance my own business. But then again, I end up also taking money out from my business, right?
Right.
So therefore, I have to subtract this $3,000 because technically I invested $30,000, but I end up taking away $3,000, right?
Right.
Okay, so I have to fix that because it's supposed to be negative. Okay. So what is going to be my total financing activities here?
Okay.
So I took a loan, I invested $30,000 of my own money, and I end up taking $3,000 of my own money.
Uh, 55, 45, 14.
Okay? So therefore, I need to know, I'm going to take my net investing, and I need to add my net financing. So how much cash should I have now?
You got to add the 44,000.
Negative. Right now I'm negative, right?
Yeah.
Yeah, so you're going to take that negative 44,132.75 and you're going to add the financing activities of $55,445.14.
Okay.
So what did you get?
Ah. Mm. I'm looking at 99,000 for that. Mm-mm.
No. Okay. So do it this way. So take the 55, 5, 5, 55,
Uh-huh.
4, 4, 5, 14, and just subtract out the 44, 132, 75.
Okay. 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 11,312.39.
That's what I have it calculated as well. Okay. And what did you start the bank account with on June 1st? If I invested that $30,000, that means I must have started at zero. Okay? So
Mm-hmm.
therefore, your total cash that you should have, okay, should be
Mm-hmm.
$312.39. And is that true? Let's take a look at my cash. Is that how much cash I have?
Yes.
Yes. So therefore, this tells you how much money you spent. Okay, so the first one for operations, this is what we generated, right? But this is all the money that we have to add back the non-cash. We got to subtract out all of our money that we spent, right? Or money that we never received in the first place. And then we got to add back the money we never spent, right? Then for investing activities, you see all the money that we spent to buy our equipment, and then what was the money that we received, whether we put in our original investment or whether we got a loan, right? That's cash money that we acquired. And there you go. And that is how you do the statement of cash flows. Okay? So the best way to understand this is you always start with net income. Okay? You're going to always add back your non-cash transactions. You're going to subtract your current and other assets. You're going to add your current liabilities. Okay? You're going to subtract your fixed assets. Okay? And then you're going to add your long-term liabilities and add any equity. Okay? So in this case, it's just taking the balance sheet, right? Instead of adding your assets, you subtract them out. And then instead of subtracting out your liabilities, you add those liabilities back. And same thing with equity, right?
Right.
And that's how you complete the statement of cash flows. Okay? Now, for the exam, I will not test you on completing the statement of cash flows.